Hello everyone, welcome to our special Q&A session with Mr. Himanshu Sinha from the product team of the Groww Asset Management Company. Recently, Groww Mutual Fund has introduced Groww Nifty EV and New Age Automotive ETF Fund of Fund. The fund NFO offer period is from 24th July to 7th August. Today we'll dive into the EV as a sector, the index and the fund, and what are some of the factors which investors could look into before investing. So welcome Himanshu.
Hello Karthik, how are you?
Doing good, thank you. So let's begin with the first question itself. So Himanshu, tell us, why should an investor consider EV being part of their portfolio?
If you look at the 1890s, there's a popular graphic going around. So in the 1890s, there were several horse-driven cars and one motor car. And by around 1913, there were several motor cars and one horse-driven car. So motor cars sort of revolutionized the industry in 1900s. And we believe that EV is set to revolutionize the industry in this decade. So in India, if you look at it, then the government of India aims that by 2030, 30% of all vehicles will be electric vehicles, which is around 13 million vehicles. And what will bring about this growth? We believe that the entire EV value chain is set to grow. And when I say the entire value chain, I majorly consider four parts. So the first part is EV ownership. The second part is auto manufacturers. The third part is EV distributors, and the fourth part is battery charging / swapping infrastructure. So all of these four parts are actually set for growth. So if we talk about EV ownership, right, the total cost of ownership, which is essentially the purchasing price of the car, as well as the fuel cost over the ownership period of your car. So the entire cost, which is the total cost of ownership, that is actually lower for an EV as compared to a petrol or a diesel engine car. So from an economic point of view, it makes more sense. The second thing is that financing of electric vehicles is also better now. So large banks actually offer competitive interest rates for an EV because they have more data and the quality of components is also better. So they actually offer better and they actually offer competitive interest rates if you buy an EV. So even the electric vehicle options across two-wheeler, three-wheeler and four-wheeler, they're also increasing with time. So customers have a lot of options to choose from. So from an EV manufacturing point of view, why would auto manufacturers manufacture EVs, right? So the first point is that EVs have fewer components as compared to ICE cars. So therefore the assembly line is actually simpler to set up. The second bit is that there's something called original design manufacturers, which produce EV components. So an OEM, an original equipment manufacturer, just has to assemble these components and he can manufacture the car. So it's actually very easy with the help of EV kits. And the government is also incentivizing these players to manufacture more EVs, and we'll come to this in a bit.
So what about the distribution and the charging infrastructure around this whole ecosystem?
Right, I was actually coming to that. So a distributor is actually incentivized to sell an EV as opposed to an ICE car. That is because it is more profitable for the distributor to sell an EV, owing to higher service revenue and higher sales margin, right? And if you look at the battery charging / swapping infrastructure, around 40 new players have actually set up camp in this space, right? Including players like Ola and Ether, who have actually set up exclusive charging infrastructure within this. So this sector also looks to be coming up. So as I said in the beginning, right, the entire EV value chain looks to be coming up in the next decade. And we believe that in the next decade, EVs could sort of revolutionize the industry just the way motor cars did in the 1900s.
So that's a very interesting perspective what you gave.
Yeah.
You know, the whole value chain seems to be more, getting more benefit out of shifting to EV per se.
Right.
But the next question would be, what initiatives and policies you think the Indian government has taken to support EV as a sector?
Right, so the Indian government is actually very focused on this sector, right? According to the Indian government has a target of around 30% electric vehicles by 2030, which is actually a fairly steep target. So basically, if you look at what the government is doing, it primarily has two main policies in this sector. The first is FAME, and the second is PLI. So I'll come to FAME first. So what FAME policy does is that it is there for the faster adoption of electric vehicles. Okay. And one of the ways it actually does this is that it subsidizes the cost of the electric vehicle itself also the battery within the electric vehicle. The second way it actually does this is that it sets up charging infrastructure throughout the country. And through its PLI incentives, the Government of India offers financial incentives for EV manufacturers and battery manufacturers.
Does this incentivize in terms of lowering the cost of the vehicle itself?
Yeah, so if you look at the FAME, so FAME essentially it is there to subsidize the cost of electric vehicle for customers and also the battery cost also for customers. So this kind of ensures that it is cheaper for customers to purchase an EV today.
So Himanshu, does it mean, will it bring down the cost of ownership of the EV vehicle itself?
Yes, it does. So what FAME does is, so if you look at the upfront cost of an EV vehicle, right, it is actually more than a traditional petrol or a diesel engine car. So FAME actually subsidizes the upfront cost that you have to give for buying an EV vehicle and also the battery cost. So both of these costs it kind of subsidizes, which makes it more affordable for customers to buy an EV vehicle.
So we have understood why EV as a sector and what the support what the government is providing for the growth of this particular sector. Now, as an investor, if I want to be part of this particular journey, I think one of the ways is through investing in an index. So Himanshu, can you throw some more light on what is Nifty EV and New Age Automotive Index?
Right, so Nifty EV and New Age Automotive Index, what it does is that it takes a universe of Nifty 500 and then it has four groups, group A, B, C, D. Group A essentially consists of auto manufacturers and group B, C and D consists of the entire EV value chain, which includes battery manufacturers, battery component manufacturers, etc. The interesting part of this is that group A is actually capped at 40%. So all of your auto companies, your Mahindra and Mahindra, your Bajaj, they're all capped at 40% and 60% consists of up and coming companies in the EV value chain. Which is why if you look at the composition of this index, 55% of this index consists of mid-cap companies and only 35 or 33% of this index consists of large-cap companies.
Okay. So on one side to look at the potential itself, but on the other side from an investor point of view, I would want to know that how has this index performed against Nifty 50 as such?
Right, so if you look at the historical performance of the Nifty EV and New Age Automotive Index, it has actually beaten the Nifty 50 in 5 years, 3 years and also 1 year. Not only has it outperformed in terms of returns, but if you look at Sharpe ratio, which essentially factors into risk adjusted returns. So even if you adjust the returns according to risk, the Sharpe ratio also of Nifty EV and New Age Automotive ETF Index is actually better than the Nifty 50 over 5 years, 3 years and 1 year.
So can you also throw some light on Groww Nifty EV and New Age Automotive ETF Fund of Fund?
Right, so first look at what is a fund of fund, right? A fund of fund is a fund which invests in other funds or ETFs. So this fund of fund will invest in the Groww EV and New Age Automotive ETF, right? So that's what this fund of fund will do. The NFO for this fund of fund is actually open right now and it remains open till about 7th of August. The minimum lump sum amount is 500 rupees and the minimum SIP amount is 100 rupees. Of course, you should always consult your financial advisor before investing.
Hope this session was very insightful and I hope you got all the necessary information to consider investing into this fund. Thank you for watching. See you next time.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.